Pi coin price prediction: how mainnet migration and new tokens supply could affect Pi network. Mainnet migration steadily expands circulating supply, shaping Pi coin price behavior. The $0.2155 level remains the key structural resistance before reclaiming the 28-cent supply zone. RSI near 45 reflects balance, reinforcing stabilization over immediate expansion. Pi coin price continues to trade within a tight consolidation after an extended distribution phase, reflecting balance rather than recovery. The price behavior appears as Pi network price absorbs ongoing mainnet migration, which steadily expands circulating supply. While the network is developing, there is low demand reaction in the price action at present levels. Mainnet migration reshapes supply before price responds. Pi network's mainnet migration marks a structural shift from a closed ecosystem to a fully transferable token economy. Phased KYC-based migrations slowly transform illiquid balances on the previous system onto mainnet and managed cycles that maintain network stability. This increases the usability of tokens, but it also creates a perpetual growth in supply instead of a release event. By early 2026, the circulating supply estimates are around 8.38 billion Pi, and with each migration cycle, the market is progressively liquidated. This expanding float directly shapes Pi coin price behavior. Newly transferable tokens enhance sell-side availability at price levels where demand is selective, and this limits upside follow-through. Consequently, rebounds are more likely to die rather than become long-term trends. Additionally, the recent launch of Streamlined Payment Integration Library lowers friction for developers, allowing Pi-based payments to be embedded into apps within minutes rather than hours. Thus, structural value is enhanced by mainnet development, whereas the price is regulated by the efficiency of absorption. Pi coin price structure sets conditions for supply reclaim. Pi coin price continues to consolidate above the 19 to 20 cents demand zone, an area that has consistently absorbed sell pressure since the late 2025 breakdown. This foundation determines where sellers run out of steam, and further continuation is not possible. Stabilization, however, does not mean recovery. For Pi network price to shift from balance into expansion, price must reclaim and hold above the $0.2155 resistance, which currently caps the consolidation range. The level $0.2155 was a previous support that turned into resistance after being rejected twice. The above supply is confirmed by the fact that each time a failed attempt is made above it, the supply is active at that point. A long-term position above $0.2155 would indicate that buyers are taking in migration-based supply and not being defensive. In the event that this is the case, price has structural leeway to swing upwards into the higher end of the supply zone of 0.26 to 0.28, where the distribution was previously heavier. This is a conditional view that is backed by momentum. RSI levels off at 45, indicating neutral pressure and not accumulation dominance. Upside continuation is structurally justified in case RSI companies surpass this threshold and a reclaim of 0.2155. Failure to reclaim would reinforce prolonged range-bound behavior, delaying recovery in the long-term Pi network price prediction.